Hello, everyone. Michael Jacob with Unleashing Intuition Secrets, joined once again by Dr. Kirk Elliott. So we've seen, I was just reading today, went through all the different things, credit card delinquency, car loan delinquency. We're not seeing the housing delinquency yet because under the Biden administration, they basically stopped foreclosures, which President Trump allowed to go forward starting October 1st. So we're probably going to see that accelerate very quickly. Banks, not a lot of banks have failed this year. There have been some, there's some every year. But I think we're moving to the point where, because of the shorting of the silver that these banks have been doing for so long, and now we're seeing silver getting ready to skyrocket way beyond what they can short it and suppress it. Yesterday, they suppressed it massively because China was taking a break. I guess they had some kind of holiday. And today, China came back and bought silver big. It went to a new 11-year high, or however long it's been. What are your thoughts on all this?
Well, I think it's very interesting. You know, some people would call it manipulation. I would call it survival of the banks, right? So there's a lot of buying pressure, right? People are buying, institutions are buying, manufacturers are buying. We just simply need silver for like everything in life. You know, like electric vehicles, batteries, torpedoes, missiles, solar power, AI chips, cryptocurrency mining, facilities. I mean, all of it. It just needs silver, right? So the buying pressure is extreme. Well, when these big banks that you alluded to have massive short positions, like we're not talking small amounts, talking huge, massive amounts of shorts. That's how they've manipulated the markets over the years. When the price goes up, they lose money hand over fist. So here's where it starts to get a little bit squirrely, right? So silver, as we record this, is 48.11.
Mm-hmm.
I mean, literally, it's over 48. If 48.70 is the old high from 2011, which to me is the legitimate high. If you can go back to 1980 with the Hunt brothers and it was 49.45, I don't consider that a legitimate high. That was a massive speculative blow off because the Hunt brothers were cornering the market, right? And they ultimately got squeezed out and they had to file for bankruptcy because the government changed the rules on it, right? So here's where the legitimate high is 48.70 from 2011. We're literally 59 cents away from that. Mm-hmm. So like we've talked about, when you hit that high and you close above it, there is no more technical resistance points. It's uncharted territory.
Yep.
The big banks know this, so they do everything in their power. When it hits that $48 threshold, what did they do on Wednesday? They issued shorts, right? It caused the price to come down to 47.50. Then massive amounts of buying pressure. It went back up to 48.11 yesterday. What did they do? They drove the price down to like 46.97, down over $1, right? Well, what happened today? Like you said, China, whoever, institutions, but I think it's more than that. I actually think it's more than that, and I'm going to explain why. This massive buying, silver's up almost 3% today, where it's now at 48.11, and I really think it's going to close over 48. I don't think they can stop this train. So the higher gold, once you get to this point in this threshold, and we get to 48.70 with no more resistance levels, no more artificial ceilings, what's going to happen to the price? That's when you start to see the massive strides moving forward. Like we saw in 2011, you could see $2 move days, $3 move days, right? Because there's no resistance. The big banks know what you and I are talking about now. So what do? It's like, oh, we can't let it get too high above 48. We're going to lose our shirts, right? So let's short it. There's just too much buying pressure to keep the price down. Mm-hmm. This is where, when you short, you ultimately lose your mojo, right? It doesn't work anymore when there's too much demand. So what kind of demand are we seeing? Well, I would say a significant amount. If you look at the futures price of silver right now, let's just look at it real quick. It's in backwardation, right? So the silver futures price right now is 47.95. The current spot price is 48.11. Like, wait a second. In a normal market, which is called contango, the futures price is always more expensive than the current price because there's a cost of carrying it. People expect the prices to go up, right? So the futures, in the future, they expect the price to go higher. Right now, the current price is higher than the future price. What does that mean? It means that there is massive amount of activity at the current level. There's people somewhere, institutions, companies that are saying, we want physical delivery, and we want physical delivery now, right? It's probably manufacturers, Michael, because the manufacturers are saying, well, we need silver to make our flat screen TVs and everything else, and we know that the price is going to go through the ceiling. We want physical delivery of our futures contracts right now, right? So that's why you see this backwardation in price where the current spot price is greater than the futures price. This tells me there's massive supply issues happening right underneath our nose. Well, here's where I think it gets worse for them. So on Tuesday, there was the government shutdown, right? So let's talk about what's going to happen when the government actually starts laying people off, right? So this is where I think Trump's an absolute genius, right? He's probably playing this chess game in his head and thinking, I just won. Because I was on a phone call with the White House communications director as he was addressing the communications directors with the Senate on Tuesday around 11 o'clock in the morning. And I'm hearing what they're saying, and media is saying, oh, they're going to probably come to a reconciliation. We'll see how this plays out, and they'll avoid a shutdown. It's like by 11:30 in the morning, I knew there wasn't going to be a reconciliation because I was hearing it from the Trump White House, right? It's like the Democrats want to extend the Obamacare tax credits, in the COVID era. Now it's like, wait a second, you want to extend these tax credits? That's a $1.5 trillion ask, and the government's running out of money. Why in the world, if you're trying to avoid a government shutdown, would you ask for $1.5 trillion when the government's already out of money? So Trump says, no way, we're not playing. We're not going to play this game. So I knew that they were going to shut down. The sides are so far apart, right? That I don't believe the media that this is going to be a few days of a shutdown. I think it's going to be weeks to a couple months.
Oh,
it's going to be a long one because the sides are so far apart. The left is asking for ridiculous demands. It's like, yeah, give these tax credits to a bunch of illegals coming across the border that actually haven't paid taxes. How would you give a tax credit to somebody who doesn't pay taxes? I don't understand. But this is the kind of junk that they're asking for.
Right.
So here's where Trump is an absolute genius. The left is who shut down the government, not Trump, right? Because they were asking for ridiculous things. So they're going to blame Trump. But here's where you and I both know it's like finding a unicorn. It's like almost impossible if you want to fire a lifetime federal employee. Like, it just doesn't happen, right? They go from administration to administration to administration. They just keep having their jobs, even if they're a horrible worker. It's like they still get to keep their job, right? So Trump's been trying to shrink the government, but you can't fire a federal employee like that. So, I mean, it's a pretty good gig, I suppose. But here's where during a government shutdown, that rule doesn't apply. During a government shutdown, you can actually fire without recourse and you don't have to hire them back. Right? So here's where Trump got the left to basically shut down the government. And he's like, whoa, these Doge cuts that we were working on, I was like, we can actually start to trim some of these fat administrative agencies, right?
Those on steroids now.
Yeah. So now he can get done what he wanted to get done. And he just used the left's words against them, right? Words have power. Words have meaning, right? And so we all know that. We can change the atmosphere around us by our words, right? So Trump just used their words against him, and I think it's genius. But what's going to happen 30 days from now? 30 days from now, I mean, starting tomorrow, according to the press secretary, we're going to start the furloughs. Upwards of 750,000 federal employees are going to be furloughed. Wow. 750,000. Now, that doesn't mean they lose their jobs. It just means they're not being paid until the government reopens. And then when it reopens, they get all that back pay, right? So it's inconvenient, right? But what also is going to happen is I think there's going to be a lot of firings, a lot of trimming of agencies during this time. Estimates are upwards of 75,000 people will probably lose federal jobs during this shutdown. So what is that going to do to the unemployment numbers 30 days from now when they're reported? Unemployment's going to skyrocket. It's not going to be a good number. I can almost guarantee, right? So when that happens, then the Fed is going to meet. What are they going to do? They're going to see the high unemployment numbers. They're going to lower interest rates again. Gold and silver go up a lot when you lower interest rates. The stock market will probably go up when you lower interest rates. Cryptocurrency will go up when you lower interest rates, but silver and gold really go up when you lower interest rates. It's very sensitive to that. So here's where we've got the head of TD Securities, Toronto Dominion Bank, TD Ameritrade, that company, saying, did a report last week that LBMA in London is 4 months away from depleting their free float silver. So what's free float silver? That's the silver that's available for people to buy. Like, we store our silver basically at the Texas Precious Metals Depository for all of our clients, right? Mm-hmm. So if you have metals stored there, that's yours. It's nobody else's. That's not free float. It's not available. Free float would be stuff that's stored at a depository that's not owned by somebody that's ready for somebody to purchase. That's what London runs out of, depletes its free float silver in 4 months. Like, what else happens in 4 months? It's basically the end of January, the first week in February, Trump's executive order, the democratization of alternative assets and 401ks becomes effective, which means you can buy precious metals, cryptocurrency, and real estate in your 401ks. So now you've got $12 trillion of captive money that's going to be extra potential demand for gold and silver. And you've got London running out. This is like the culmination of a perfect storm. Added to that, we're going to surpass the all-time high where there's now going to be no more technical resistance points. It's like, what else could you ask for in an investment? Right? Completely minimizing your risk and maximizing your return. Now, when I say that, we're kind of told people, and I've been getting a ton of calls. It's like, how do we prepare for our 401ks, being able to go into gold and silver in February? It's like, you know what? You don't have to wait. The big if, and this has always been the rule. I just didn't know that people didn't really know it. If you're working for a company and you have a 401k there, pretty much general knowledge is, well, I can't get rid of it unless I quit or retire. Not true if you're 59 and a half or older. If you're 59 and a half or older and you still continue to work there, you can do an in-service rollover, meaning you could take all of your existing balance of your 401k. Say you had 500,000 in there, is your retirement. You could roll it all into a traditional IRA, take your balance to zero. You could go into physical metals. Now you don't have to wait until February, and you still keep your 401k and make your contributions every paycheck that you get, right? But you're just adding the contributions to a zero balance because you rolled all of it out or a portion of it out to go into physical precious metals. You can do that now if you're over 59 and a half. If you're under 59 and a half, sorry, you're out of luck. I mean, you can't, right? But until February, then it becomes allowable. So as I look at some of these things, and we try to come up with every strategy humanly possible to protect and preserve and to grow and to thrive, this to me is a big one. If you're over 59 and a half and have a 401k, roll it over now to get into physical metals, because like everything we've talked about, we've got the impacts of the government shutdown. We've got silver approaching its all-time high, no more technical resistance. We've got LBMA running out in 4 months. What else? What else do you need, right? More wars and rumors of wars? Well, we've got that. More capital constraints on banks.
Right.
I mean, you talked about it.
That's one of the reasons why I brought up in the beginning all of the things that are starting to default. 2008 levels. So we know what happened. A lot of banks failed.
Yes.
Highest bank failure rates ever.
Yeah.
Unless we go all the way back to savings and loan crisis back in the 70s and 80s. But what are your thoughts on this? You're very insightful in this. What you think we're going to see a lot of bank failures coming up?
Yeah, I do. So big banks because of their short positions, smaller banks because of delinquency, right? So you had mentioned this early on. So we haven't seen this in mortgages yet, right? I think that's coming because here's the problem with banks right now. It's a liquidity trap in the sense of the Fed is printing money. They're trying to stimulate the money supply. They're giving that to banks to lend out. So this is how it should work. Fed creates money. They give it to the banks. Banks lend it out. People use it. That grows the economy, right? But here's what's actually happening. Fed printing money creates inflation, gives it to the banks. The banks get the money and they think, we don't like where this economy is headed. We think that these people, if we give them a loan, they're going to be delinquent or default on it. We don't want to lose our capital. So what are they doing? They're sitting on it. They're not lending it out, which is going to hurt the economy. This is what causes stagflation, these liquidity traps where the Fed is creating inflation, giving it to the banks. The banks aren't giving it out unless you have like a perfect credit score. Right. I mean, very few people are getting loans right now. I was just talking to a business owner in Utah 2 days ago. They have a big company and they said, you know what? We can't get a loan. We need a short-term inventory loan, right? We can't get it from the banks. Even fully collateralized with all the equipment that they have, they can't get a loan. It's like, why not? The banks don't want to release the funds because they don't believe that the economy is headed in a good direction. So, you know who else is actually doing something now to add to all of this is Warren Buffett. So the Oracle of Omaha, head of Berkshire Hathaway, he's poo-pooed gold and silver since the beginning of time. Right? He says gold and silver have no utility. They're just growth things and they're kind of risky and speculative. And it's his own philosophy, which is fine. Everyone can have their own investment style, right? His is being a value investor. He likes to buy newspapers. He likes to buy insurance companies. He likes to buy properties that provide income. He likes investments that he can buy at a value that spit off income. It's his style, right? So, and everybody has an investment style. And he's known as like the best value investor on the planet. He buys companies, not necessarily stocks. He buys companies at a discount when they're on death's door, and then they grow, and then he makes a ton of money, and he's the world's 5th wealthiest person, right? I mean, it's crazy. So, anyways, he's poo-pooed gold and silver for decades because they don't have utility in his mind. Well, he didn't say this. He didn't say what I'm just about to tell you, but his actions prove that he loves gold. Why? Because the last quarterly statement that he had to provide to the SEC, where it talks about the Berkshire Hathaway's investment interest, what did he do? He dumped $535 million into Barrick Gold in Canada. $500 million investment into a gold company, a mining company. Why would you invest in a gold mining company if you didn't think gold was going to go up? Especially with his philosophy of being a value investor. So what does that philosophy tell us? When he invests in the gold mining company, he believes gold, even at these ultra high levels, all-time highs, is a value, or else he wouldn't do it.
Yeah.
Right. So
I remember hearing one time that his father was really into silver, and that at one point he invested heavily, kind of like a Hunt brother type thing. And the government basically came in and spanked him. So he's been, kind of coy about it. But he can buy stocks, so that's brilliant.
It is brilliant. And what's exciting to me is all of us that own the physical metal, right? When we own the commodity that industry is going to be able to need. We've seen gold and we've seen silver actually go up like 140% over the last few years.
Yep.
But where is it going moving forward? I mean, I really think we're going to probably hit 75 by the end of this year, probably triple digits by
585. I believe that. Yeah.
Yeah. By the spring or early summer of next year, 120 to 144.
We think the same. Yep.
because of the price floors that G7 is going to put on commodities. I mean, there's so many reasons.
Yep.
It's like, okay, going from 48 to 144, that's almost tripling. So everyone's all excited about silver doubling over the last few years. The best is still yet to come.
Always.
You haven't missed the boat
Yep.
at all. Right? So boy.
So that's really where most people, really where the most people make money, in that last push.
Yes.
And we're getting closer and closer and closer to that last push, which we'll go into next year, maybe even into the year after. But like what I love about being, having, my silver in your depository in Texas is that I can roll it over very quickly into gold, because we've talked about how that's going to be, the next big boost. So I've seen throughout time, silver gets the big run, which we're seeing right now. And then we have the, price difference between an ounce of silver, how much it costs to buy, how many ounces of silver it takes to buy gold. That's starting to, squeeze a little bit. And at some point, like we talked about, percentage wise, we're going to start to roll over into gold and take advantage of that next big push in gold. Now, someone in the chat said, I live in Canada and can only hold metals and she calls it RRSP, which is a 401k for us. And it's vaulted in Calgary. Now, I know that you, people from overseas around the world invest with you, and they can do that if they put the money in the depository. What would you say with someone in a 401k in a different country? Can they convert over to that 401k into your vault?
Probably not, quite honestly. I mean, I wish the answer were yes, but probably not. There's a couple reasons why. You can be a Canadian and store your metals in Texas, which we could, deliver there, but you'd have to have a U.S. bank account. These 401ks don't have U.S. bank account, right? So it's anti-money laundering and all these different know your customer rules and things like that. It's like, I wish we could, but we just truly can't unless you have a U.S. bank.
Gotcha. Very good. Now, in like you're talking about, I love to go over into your site. You have the best. I click on the silver. I'm gonna share the screen real quick. I clicked on the silver window. So this is KEPM.com /Jaco. So you go over and you come into the site. Of course, you got the contact information, so you can get a free evaluation and some insights of what you can do with your money. Now, looking at the price of silver, let's look at it in relation to the dollar. All right. So I love these graphs. Everyone, I love playing with it. So it's all, whoever did this for you is brilliant. So we're seeing that the dollar is, percentage wise is below zero, which means it's losing value. And we see that, this year, almost a 50% increase right now, probably right at 50%. So I know last year we had a gentleman that had a significant amount of cash, and we're suggesting that he put it in silver. And he said he was only going to put a certain percentage, 25%, and he was going to keep the rest in cash. And we kind of advised against that. But of course, now we're seeing, that he really missed the boat massively by not taking our advice. How do you see that going forward?
Oh, I think if you don't act on the information that we went over today, you're going to miss even more, right? So we can't ever, you can't cry over spilled milk, right? You can't change the past, but you can change the future, right? By changing your present, right? It's just common sense. You want the future to be good, you better make changes now, but don't dwell in the past. You can't change it, right? But hopefully we learn from it. And like we talked about, you missed people. I've been, this weekend I was sitting on the couch watching college football with my 20-year-old son, right? And I'm just looking at our clients. We've been very blessed. We have well over 30,000 clients, right? And I'm looking, it's like, oh my word, I don't have a single client that's not at a profit position unless you invested over the last 2 weeks. But because it's an 8% cost of ownership. However, today alone, silver went up 3.6%.
Yeah.
Doesn't take very long for you to recover your 8%, right? So I'm just looking at this, and I've got clients that invested, at 17, 18, 19, $20 an ounce, people that invested at $29 an ounce, people that invested at $35 an ounce. I mean, they're still significantly up. I was talking to this family. They invested in the upper teens and low 20s, $9 million. It's now worth $21 million, less than 4 years later. This is life-changing, legacy building, right? And then clients who invested $500, well, it's now worth over $1,000. That's incredible, right? It's like doubling. Where else are you going to find that, right? And then I also started looking, it's like, there's a lot of companies out there that sell semi-rare, commemorative, collectible garbage, and they sell it out of their own inventory, right? There's a large gold and silver dealer that everybody would know. They see him on podcasts all the time. I just had a client call me this morning because they tried to sell their silver and their gold that they had purchased from them in the past because they wanted to go into bullion. Well, this company says, we're not buying any silver back. Like, what? You sold it to the client. Now they have no out. They said, no, we don't. There's supply and demand discrepancies, and we just have no need for silver. It's like, that's because they didn't do it right. They've got so many people selling into the strength of this market that they've ran out of money. They don't have enough liquidity to pay people, so they basically suspend any, redemption. It's like, well, good grief. How safe is that? It matters what kind of metals you buy, which is why we only do bullion and we drop ship from the depository. So there's always liquidity. It's like, when you want to sell it, we just sell it back to the depository. You get a wire the next day. We don't carry an inventory. But here's what's even worse. They also had some gold that they bought. And they said, what's your buyback price? Because people always say, they're going to buy it back at no commission, right? Like you do. It's like, no, they don't. So this person's gold buyback price was $500 less than spot. 500 less. It's like, I don't even get that.
Wow.
Even if I had the rarest of rare coins and we wanted to sell it to the depository, they don't want it. They don't care about the rarity or scarcity. They just want to turn it into a coin or bar. Melt price is 4% less than spot. That's way significantly more than 500 less than spot. Why not just sell it back and melt the dumb thing into a coin or a bar, and you're going to get more money? So we had them connect with our depository, and they gave them $10 less than spot. Rather than $500 less. It's like, there is going to be such a problem in this industry, people trying to liquidate some of these rare coins when they're buying from companies that are selling out of their own inventory. These companies are going to run out of liquidity in a massive, we're all selling to lock in profits, right? So
the answer to that question right there. So gold collectibles aren't good. You just had to answer that.
No,
now I did the same thing. I was like a hardhead about this. I was in collectibles for a long time, most of my life, really. And then I went to, like, in the last boom, just as it was getting ready to bust, I was like, okay, it's time to get out. So I took my collectibles, and it was not working out well. They pretty much, you're going to get, if you're lucky, which I was lucky, I got cost, whatever the price of silver was. Now I could have gone online and, got on, put it out there to the internet or whatever. Who wants to buy this, collectible, and try to do it that way. And meanwhile, the price is going down. I knew it was going down. So I just went in and just started selling. So from now on, thanks to you, I've been buying in bullion because you've given me great advice. And people are telling me, don't buy that collectible bullshit. Get bullion. And
I agree.
Look how much more it is. And then when I went to sell it, it was like, oh, I learned hard.
Oh boy. Yeah. I mean, if you have that stuff, call us. We'll try to help you out. And
That's sweet. Very good.
Yeah.
Well, thank you. And I know you have a great team. I appreciate your team. Like we talked about, you'd see I think it's sleeting behind me right now.
Nice.
I don't know if you can see it.
Yeah, I can see it.
But like I told you before the show, there's snow. There's snow on the peaks already, and you should be getting it. So I bought a pass, which I can ski in Colorado and here. So I'm going to come visit you. We talked about this, and I'm going to take your team out to dinner, treat your whole team. And the reason why I want to do that is because you've helped so many people that are, have listened to the show and then gone in and invested with you. So thank you so much for what you do for us. Help us out, and look forward to sometime. I don't know, maybe it's in the early part of next year, but I'll definitely be there and take your team out. And I'm taking them out for everybody out there that has been investing with you. Thank you so much.
Well, that's awesome. Thank you for that. That's very gracious.
All right, guys, get into silver. We've been talking about it for years now. I think, FOMO is going to start to kick in. When we go over 50, and we hold that, I'm actually looking at piling in a little bit more at that point, because I think at some point we may see a big pullback when the stock market crashes. If it does crash this year, it may go into next year. So if they do get a pullback, I'll hit it. But if we don't, when it hits 50, I'm piling in with more. So because I know it's going to go double, triple beyond that.
Agree.
All right, sir.
All right. Have a great weekend. We'll talk to you again next time.
All right. Bye-bye.